How's it going, Richard? What's up, some person? Someone let me know if the sound is good. Otherwise, I'll try to mess around with it. Hey, Nick. My name is Jeff. What's going on, everyone? Thank you, some person. All right, we'll get into it in just a minute. Just going to see if anybody else is joining. All right. Get started in just about a minute. Hey, Sidrius. What's going on, man? All right, one more minute, and then I'm going to get started. All right, so I want to start by talking about, obviously, the trigger orientation. So for those of you following an MSW, you know that when the daily and hourly triggers here crossed below the weekly trigger, that was a very bearish signal because price is then, hey, Matthew Ryan's here. How's it going, man? Just quick break. Matthew Ryan on Twitter is an excellent follow for those of you trying to make it as a trader. He always posts like inspiring, motivating tweets. He's a great person in general. One of my favorite follows on Twitter. So if you guys want to check him out, I'm Matthew Ryan. Great to see you here, man. All right, so getting back to it. Price below all triggers is obviously very bearish. We turn on the trigger orientation trend. It's not on this chart. All right. But yeah, price below all triggers is very bearish. So over here happens to be, I really thought GME was going to get that monthly trigger breakout, and I was very bullish here. I thought price was going to break the monthly trigger and explode higher. Obviously, I was wrong. And instead, the hourly trigger and the daily trigger crossed below the weekly trigger, which is extremely bearish. And since then, it's just been a nasty, nasty move down. Now, we have triggers and we also have velocity. So on the bottom, you'll see daily velocity. And velocity basically measures the strength of the sell program / buy program. So what do I mean by that? We can see here that with each new low that price made, daily velocity was making new lows. And when that happens, it tells you that bounces up are going to reject the daily trigger because velocity made no bullish divergences on the way down. So as you can see, price made a low here, daily velocity checked in here, price made another new low, daily velocity was stronger, price made another new low, daily velocity was stronger. When that happens, we expect any bounces to reject against the daily trigger, which it did perfectly right here, and for price to head back down, which it did. Now, you'll notice from this rejection point, price made a low, velocity made a new low. Price made another new low, velocity made another new low, which means that we expect all bounces off the daily trigger to be rejected. Price came up and didn't even hit the daily trigger, was rejected immediately and made a new low. Now, what do you all see when price made this new low? What's the main difference? The biggest deal is that when price moved down from 1460-ish to 1290-ish, you can see that daily velocity did not make a new low. And that's the first indication that price is starting to bottom. Not that it's bottoming immediately. Yeah, exactly, Joe. Not that it's bottoming immediately, but that the sell program is beginning to lose steam. Now, if this move was indeed bearish, right, then we would have seen daily velocity make new low, just like it did on each of these moves. From the fact that daily velocity did not make a new low, that's the first sign that, okay, sell program is starting to run out, and now we have an indication that the extreme bearishness that the stock has been in for quite a while is starting to turn slightly. Now, the rule with divergences is that when there's 3 bullish divergences, price returns to the trigger. Now, you'll see that everywhere on any stock, but that's just basically how it works. So one bullish divergence doesn't do much, but tells you that the next new low will be our second bullish divergence. So when price made a new low here, you can see from here to here, it's another new low from 1291 to 1260. So even though it was marginal, the fact is it was a new low. And what that does is that tells you, okay, now this is our second bullish divergence. So ever since this low, price made one new low and then a second new low, and velocity never made a greater print than right here. That tells us that now we have 2 bullish divergences. So after each bullish divergence, if price comes down and velocity does not exceed the previous low, then we expect a bounce. Now, not a bounce to the daily trigger, but a bounce. Again here, price made a new low, daily velocity did not make a new low, we expect a bounce. Once you have 2 bullish divergences, price is either going to attack the daily trigger or it's going to fizzle out again and make a third new low. Now, if GME continues to fizzle out and makes another new low, that'll be the magic number 3 bullish divergences. And at that point, it would be extremely bullish for GME because that tells you that sellers have used everything on this push down and they're completely depleted with no ammo left in the tank. And what that means is that if there is a new low, price will then move from here straight up to the daily trigger. So something like this. And once it does get to the daily trigger, it is highly unlikely that the daily trigger will act as resistance anymore. Highly unlikely. What that means is that price can then break above the daily trigger, get a bullish hourly trigger, daily trigger crossover, and explode higher to the weekly trigger. Now, just an example of hourly trigger crossover is you can see here the hourly trigger crossed below the daily trigger and the stock got plummeted to the downside. We see here when the hourly trigger crossed above the daily trigger, price was able to push up straight up to the weekly trigger. So that's how the bullish and bearish crossovers work. So if let's say GME is right here, if we do then make that new low, that would be the third bullish divergences. That would be the third bullish divergence. We would expect price to rocket up to the daily trigger. And then we would expect, instead of the daily trigger acting as resistance, we would expect price to be able to get above, get that hourly trigger, daily trigger cross, and then explode higher. So no matter what happens here, GME is actually looking quite bullish from this new perspective because either price will continue up to the daily trigger where there's a chance that it could break through or it may reject, or price makes a new low, but that would be our third bullish divergence, which is extremely bullish, and price would rocket higher to the daily trigger, possibly get that bullish hourly trigger, daily trigger cross, and move all the way up to the weekly trigger. So that's what I'm saying for GME. I'm fine with both outcomes. Now you can see over here we have the LDPM lines. So for those of you who aren't on MSW, just explain how this works. So LDPMs work very similar to triggers in a sense that there's a 2-week LDPM, there's a 1-week LDPM. The blue, here I'll take off the 5, doesn't really matter much. The blue is the 4-hour LDPM, the green is the 1-hour, and also take off the 15-minute. When the LDPMs are stacked bearishly, with the highest time frame on top, followed by a lower time frame, lower time frame, lower time frame, lower time frame, then we expect the stock to move bearishly. So you can see throughout this entire time period, here's a really good example actually, where the one week trigger, the weekly trigger crosses, the weekly LDPM crosses below the 2-week LDPM, and price is now below the 2-week, the 1-week, the daily, the 4-hour, and the hourly, and we could see price get destroyed to the downside. Now, once you get some bullish crossovers here, the hourly LDPM and the 4-hour LDPM cross above the daily LDPM, which is the blue line, price is able to move up to the next LDPM level before it was, rejected. And you'll see this all over. So here, for example, the 1-week LDPM crossed above the weekly LDPM, and price is above the hourly, 4-hour, daily, weekly, and 2-week, and price is able to move up to the upside until that earnings event. Second. I'm just reading through some of the comments. So Snowcase says, hey James, why is it 3 divergences and not 2 or 5 or X? Good question. It's more like numerical magic, but that's just what works. What is PM? If you meant LDPM, it's liquidity levels in the market. So when price is above the daily LDPM, it means that buyers are dominating over sellers in the order books, meaning the bid is aggressively dominating over the ask. When price is below the daily LDPM, it means that sellers are overpowering buyers in the order book, and the ask is dominating over the bid. Joe says, James, I'm seeing 3 bullish divergences in the hourly velocity. Do you see the same? I don't think I saw the same. Oh, if you're talking about this, velocity resets every time price touches the trigger. So those divergences would have reset. And how do we get those LDPM lines? Is a different indicator from LDPM? No, it's the same indicator. You just have to mess around with the settings. So this is the 5-minute chart, and whichever LDPM you want, just talk about that. Just make the look back that time frame. So for example, green is hourly, so the input is just 60. The 4-hour is just 60 times 4, which is 240. So that's how you get these LDPM lines. So what we're seeing with GME here, if price is going to move up and attack the weekly LDPM, or similarly, if price is going to move up and attack the daily trigger, they're both at about 1466, 1475, close enough, 10 cents. Then here's what we would want to see. The 1-hour LDPM has now crossed above the daily LDPM. And if the 4-hour LDPM can cross above the daily LDPM, that will be the indication that price is now going to rise up towards the weekly LDPM. They'll probably hit the daily trigger as well. Now, because there's only been 2 bullish divergences so far, there's no guarantee that price will be able to poke above the daily trigger. Price can get there, but there's no guarantee that it will be able to break above and rocket higher up to the weekly trigger. If there is a new low, that'll actually be even more bullish. And once there's this new low, that would be an all-in type of buy, and we would expect price to rocket higher to the daily trigger, break above, get a bullish hourly trigger, daily trigger crossover, and rocket up to the weekly trigger. So understanding today's upside move comes down to understanding yesterday's bullish divergence. So price made a new low, daily velocity did not make a new low. What that means is that you'll have some kind of bounce, and then if price breaks back below the hourly trigger, we would expect a new low to the downside, which would be the ultimate buy. I personally am kind of hoping that would happen because that would be a great entry for calls, as that would be the 3rd bullish daily velocity divergence. And if price can continue higher to the daily trigger, which would happen if the 4-hour LDPM crosses above the daily LDPM, then we would have then we would move up to 1466 area, but it's not 100% confident that we could break above the daily trigger. If SPY gets another low, do you see another low for GME? That seems logical. Yeah, if SPY makes a new low, that would seem logical. So we can see the SPY chart from yesterday. So you had bullish above here, bullish above the daily LDPM, 1461. And we had some bullish divergences at the low. And when you look at SPY today, actually the wrong chart. Here it is. So you can see SPY bullish above here, 1451, the daily LDPM. You can see once price broke above the daily LDPM, price was able to rocket to the upside from 416.40 all the way up to 417.92 so far. So you can see the daily LDPM is a very powerful acceleration level. Now, of course, SPY also broke above the hourly trigger, did some pinning for a while, and then got a bullish crossover right here and erupted to the upside. Just got a perfect textbook bounce off the 5-minute trigger and pushed higher again. Hourly velocity is increasing to the upside. So it's hard to be bearish on SPY for now, but we'll see what the data report says tonight. And QQQ as well. Broke above the daily LDPM right here at 349.83. Now almost 70 cents higher. So going back to GME, quite simple. to me, what happens next here, if the 4-hour LDPM can cross above the daily LDPM, then that will mean that GME is going to head up to the 1466 level. And if price breaks back below these LDPMs, then that means we're going to be headed down to one final low. And this is going to be the all-in buy for me, because at that point, if GME makes this new low, I would expect price to return back to 1844. I would expect it first to rocket higher to the daily trigger, very similar to exactly what we saw here. Rocket higher to the daily trigger, get the bullish trigger cross, and then fill that air pocket up to the weekly trigger. So that's my thesis on GME. If you came a little late and you missed the beginning part, it's not that long. Just as soon as the stream ends, you could go back to the beginning and watch it. If you have any questions, I'll gladly take them, but that's what I wanted to speak about today. AMC, of course, is also getting primed for a huge move if the hourly trigger can cross above the daily trigger. But we're not going to discuss that. We're not going to discuss that right now. So you can see the daily trigger is at 1010. So where is it? So yeah, so in the AMC report, explosive above the daily trigger, which was at 1007 yesterday. You also see price breaking above the weekly LDPM, and you can see this crossover that I spoke about before, 4-hour LDPM crossing above the daily LDPM and price moving up to the weekly trigger. So for AMC as well, all the snap graphs, so we had VOX in the inhibition zone, which we know is bullish. So right here, VOX is in the inhibition zone. And then you can also see that the snap graphs predict future price action. So crosshairs above the gold line indicate positive returns. Below the line indicates negative returns. You could see the crosshairs above the gold line on the 1, 5, 10, 20 day. And of course, price was also in some purchasing support when it closed yesterday. So because price was in purchasing support, influence distribution is bullish right here. The peak is in the blue. And yeah, that's the options table, but there wasn't much there. So price can break above the daily trigger. Strong upside acceleration is expected. VOX in the inhibition zone, which is bullish, and the snap graphs are predicting bullish price action over the next 20 days. So yesterday was pretty easy call for AMC. And today AMC broke above the daily trigger, and sure enough, was able to accelerate nicely higher. I see a question, can you go over what you saw to see shorting down on AMC? Yeah, I can, but I'm not gonna do it at this moment. It's in the deep dive stocks report. I just don't want to go log in right now. Let me see something. Yeah, so for GME also, we want to see the 5-minute trigger hold support. See if hourly velo is picking up. Yeah, so hourly velo is increasing to the upside, which is a positive sign. You can see once price, the 1-minute trigger and the 5-minute trigger cross above the hourly trigger, that's what sparks the strong acceleration move to the upside. All right, so I'm done here. That's basically exactly what I wanted to speak about. But if there's any questions, I would gladly take them. You guys just let me know. Any triggers above the monthly? Is that even a thing? No, it's just hourly, daily, weekly, and monthly. When price eventually breaks above the monthly trigger, that's when we'll start our squeeze. Monthly trigger is the strongest acceleration level out of all of them. There's a 15-minute LDPM, helps to be able to see things on a smaller time frame. This is the 5-minute if you really want to be scalping. You talk about fundamentals too. I'm really not a fundamental guy, although I do believe in gaming, and that's why I'm a believer in GameStop. My main fundamental thesis is that I simply trust Ryan Cohen to complete the job that he took on a few years ago and not to give up in middle. So, but Fundamentals aren't really my thing. My thing is more seeing how big money is positioned, which the deep dive stocks report do a great job of showing, and being able to track price action using the triggers. So, for example, here, if I wasn't streaming, I would have bought this right off the 5-minute trigger because hourly velocity is increasing to the upside, which means that the 5-minute trigger is going to provide stronger support. So I would have bought around here and sold here. But like whatever's going on in the world, wars, interest rates, inflation, macroeconomic news, that doesn't really affect anything. The triggers are going to provide, the guide to price action, and everything else is really secondary to me. So no, I'm not a big fundamental guy at all. Tesla had a nice bullish cross here. I went long earlier looking for the hourly trigger. Yeah, it's pretty much it. So for GME, I'm not sure if this is going to be the move to 1475 or not, but it's quite simple to me. If the 4-hour LDPM crosses above the daily LDPM, I would expect price to move up here. Price ends up selling back below this level. I would then expect one more low. I'd expect something like this, and then that low would be pretty much an all-out buy for me. That's where I would start purchasing leap calls, because I think that would be a significant low, definitely for a very, 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 very long time. All right, so I'm getting ready to close up the stream. If there's any questions in the next 2 minutes, I'll take them. Otherwise, I'm going to close up the stream. When do the velocities reset again? Velocities reset if price touches the trigger. So for example, here, price tapped the daily trigger. So if there was any bullish divergences before that, once price taps the daily trigger, the count resets and you start over. Is VOX stable for GME now? We're going to find out in tonight's report. If you ever see GME going above 50 again, if price breaks above the monthly trigger, I think GME will squeeze into the hundreds. But it's a long way from where we are now. Monthly trigger is an extremely important acceleration level, very, very strong. And this is, price gets above here, bears will start covering. Otherwise, they're going to find themselves in too many losses. So a lot of the reason for the acceleration above the monthly trigger is because that's the line in the sand where bears are not willing to stay short if price moves above this trigger, because emotionally and naturally the stock price will move up higher anyway, and they're going to want to start covering right when price breaks this trigger, and not wait for price to move even higher regardless of what they do. So VOX for GME, we'll find out in tonight's report. If you'd like to see it, you can sign up for MSW at literally $10 a month right now for the Halloween sale. On what data is the triggers based on? That's not really public. Okay, thank you so much, everyone that joined. Just wanted to speak about my thoughts and have this video recorded because I want to post it to MSW later. So thank you guys. Best of luck on everything, and see you around. Sorry, Kevin had a question. Do you see AMC and GME moving together? I think the move up in AMC on GME today had a lot to do with AMC moving higher, for sure. When do you think volume will come back in? Above the daily trigger, we'll see significant volume up to the weekly trigger. It takes breaking a trigger to get volume, to really get the volume in. All right, guys. See you on Twitter.